Welcome to Just Minding My Business Media. I hope that you're having an amazing day. Today, I'd like you to meet Matt Putra, who is the founder of 8X, former senior partner and CFO in private equity, seasoned fractional CFO with over a decade of experience helping e-commerce and consumer brands achieve financial clarity and sustainable growth. With a track record of turning six-figure losses into seven-figure profits and driving 300% year-over-year growth, Matt specializes in transforming financial operations for scaling businesses. Wow.
Yeah, it's
That's,
fun. It's been a fun ride.
yeah, it sounds like it. It sounds like it. So tell us about um 8X.
Yeah, well, I mean, I've always wanted to have a business and I couldn't think of what I was going to do. And then when I was in private equity, I had a friend ask for some help with his business and financial modeling and cash flow forecasts and whatnot. And I helped him and I really enjoyed it and helped him make a whole bunch of money. And then he said, can you help my other friend and this friend and that friend? And so then I was like, oh, I wonder if I could do this kind of on a full-time basis. So I started off just on the side of my desk. I was like, oh, I'll pay for a couple of travel a year, maybe, right? And then it just kept growing. And then I was like, well, let's try to quit my job and see how it goes. And that was 4 years ago, basically.
Yes, and that's how it starts. You just helping a friend with what you know,
Hmm.
and then you find yourself, I like this.
That's exactly how it happened, 100%.
Yes, yes, indeed. So fractional CFO. Let's explain what that means to our audience.
Sure. So, most of us are familiar with the concept of a full-time chief financial officer. So someone that you pay, anywhere between two and 700,000 a year, depending on how big the company is, right? The average would be probably 2 to 300,000. And this person is an expert at accounting and finance. So meaning forecasting and planning and cash flows and banking and insurance and tax and a bunch of different things, right? And their job is to make sure the business, a few things, stays compliant with all the governmental agencies. That's a big one. Um, doesn't run out of money. Another big one. And can afford to do what the vision of the owner is. So make sure that the business has resources to achieve the goals of the owner, right? And if there's a problem, to see that very early and try to course correct and fix it. So those are the broad buckets. And a fractional CFO is someone it typically that has done that in a bigger business and like me, maybe got tired of working corporately and now wants to do that on a different scale for a different size of business. So for example, like, my private equity group, there was like 9 subsidiaries and multi offices, and I just didn't want to commute all this time, and now I work with companies that are doing 2 million a year, some doing 20 million a year, some 30, well, a couple, one at 100, one at 80. But I'm working one day a week for one of them. I'm working like 2 days a month for another one. And then I have four other CFOs that work with me and doing similar things. And so what a business owner will get is someone that has experience at a very high level, but they won't have to pay 300 grand, right? Or 200 grand. Um, you know, you'll pay anywhere from could be 70 to maybe 150, perhaps, depending on how big your needs are. But usually less than half to half of what you'd be paying a full-time person. Sometimes
Okay.
less than that, but
Yeah, so it's an economical move for big business because
definitely. Yeah, and in a lot of times we are actually more effective than a full-timer because we can only do the things that are the highest ROI rather than try to work on all the things. And so, I mean, a lot of times someone will outgrow the need for a fractional, they'll need a full-time again, and that's happened a few times for us, and that's the dream. Or they sell their company.
okay. So, what industries do you work with?
Primarily e-commerce and CPG. We do a bit of like clean tech, green tech, and a little bit of SaaS, some manufacturing, but primarily e-commerce and CPG.
Okay. Okay. So, transforming financial operations.
Mhm.
When you walk into a company, how does that transformation begin?
Well, the first thing we have to do for anybody is an audit, right? And we got to figure out what's going on, how they're doing, how's cash flow, how's this and that. And the next thing that we do is we start on a process to build a financial forecast. And the first thing is we want to understand revenue. What does revenue look like now and in the future, next couple of years? Um, we need to understand, how does cost of goods sold look like? How does your hiring planning? What's your fixed costs? And then we have then we have your profits and outflow. From profit, we look at cash flow, and then we look at your balance sheet. And so we walk through the pieces of building a financial forecast. And in so doing, we learn about all the different areas of a business. And by the end of 8 weeks, typically, we have a very well functioning forecast that's useful for making decisions. Um, yeah, I actually just finished a meeting just before this, actually, where we delivered their multi-year forecast in a way that made sense. And now we can send it to a couple lenders and tell the story of where we're going and how we've changed, and we know a lot about this business by now.
Yes, yes. And a lot of times, you know, that's a huge thing with businesses because that helps you get money,
Mhm,
loans, things like that.
mhm,
So you need to have a clear picture
mhm,
of everything.
mhm.
So what, okay, I know you said you work with those particular types of businesses, but do people typically reach out to you for your services? How's that work?
Oh, I think it's a mix now. We do a bit of advertising, we do a bit of outreach. I'm still predominantly, we get inbound and referrals, I would say. Um, and yeah, but it's a mix of all of the above, I think now. Like we're growing to a point where just inbound only is not sustainable, like for our size. We're not huge, but we're not small, and so um, we have to kind of take you know our future into our own hands now a little bit.
Okay. So
Mhm.
if businesses want to work with you, how do they connect with you?
Yeah, I think a really great way to connect with me is on LinkedIn. You just look up my name, Matt Putra. Our website is 8x.co, EIGHTX.co. I'm on Twitter as the e-commerce CFO. Yeah, any of those places is a great place.
Okay. And I mean, you turned the company around from a six-figure loss
We did.
to a seven-figure profit.
We did.
That's amazing. Can you walk us through what that transaction looked like?
Yeah. So when this person called me, they had lost, multiple six figures in a couple years in a row. And they didn't have a lot of money. And I was like, look, I don't know that you should be paying me. You should probably be trying this ABC, and don't give me your money yet. See how those things go. And they said, well, we really want to work with you. Can you help us? And I was like, look, maybe I can help you, you know, but I'm nervous about taking your money. They're like, no, no, I want to give you the money. Let's work together. Okay, great. So we started with them. We built our forecasts, and we had to meet once a week, sometimes twice a week, to manage cash flow. Oh, I got to pay this guy. What should I do about this other guy who's not going to get paid? And I have to pay Facebook, but I can't pay my supplier. And I have to pay Google, but I can't pay Facebook. And so we're banging on the keyboard and managing cash flows every week. And then we went, okay, we have a little bit of money. Well, what should we do with it now? And so we go, well, we could put it into this advertising or hiring or product. Like, what's the best ROI? And so we'd be looking at, where should we put the money and what should we do? And so it was probably about 9 months of meeting weekly or maybe even bi-weekly. We just managed and, like, cut these expenses and put money in this bucket and pay this person, don't pay that person, and just managing through all that. Then we started to just put money in the right spots, saw a little bit of growth. Then we broke even for the first time, and then this another month we broke even, and then we negotiated with our suppliers for better terms, and we found a new supplier for better cost of goods sold. And so then we started to stack these wins, and we made a little bit of money. And then we went, okay, great. Now we went to our lenders. We said, hey, we're making more money now. Can we either have more money from you or better terms from you? And so we started to getting a little bit more money, a little bit better terms. Then we had, okay, we have more money now. Where do we put this money? And who do we pay? And so we just started putting money in the right places. And the way that we knew they were the right places is we would sort of test. what would happen if we put money here or there, and kind of look at the potential outcomes. And and then we would go, okay, well, let's try this and let's monitor it. And so we would, and slowly but surely, through negotiating with suppliers, getting our cost of goods down, through managing our cash flow, through getting better payment terms, through getting better lending, um, through like, you know, we had a problem once where we sold out of all the product way faster than we thought we would. And what are we going to do? Well, I was like, well, let's just pre-sell. And they're like, well, we've never done that before. I was like, well, just pre-sell, see how it goes. So we ended up pre-selling hundreds of thousands of dollars. And so look, it was a lot of work, but one of my favorite stories, because this husband and wife went from losing 6 figures a year to making 7 figures to now exiting for 8 figures. And so they've changed their lives in 3, 4 years that we worked together. So it's a super fun story. And I have to give the owners credit. They knew how to make a product that their audience liked. And
Mhm.
so, and they also um were, call it humble enough to just know what they didn't know and ask me questions all the time. And so we worked hand in hand for 2 years straight. And again, like I say, they've exited for 8 figures now.
Wow, that's definitely amazing because and that's why they hired you because they don't know.
Hmm.
And most business owners hire somebody and then they want to kind of like take the reins.
Hmm. Hmm.
And why did you hire the person if you could do it yourself? What was the
Hmm.
point? So yeah, that sounds like a great connection. They were coachable, they
Absolutely.
were willing to try things,
100%.
so that leads me to ask, I should say, when you're working with a client, when you meet a client, let's put it that way, there's got to be some type of chemistry.
Oh
And
yeah, definitely. Yeah.
how do you determine that the chemistry is there?
Yeah, well, we don't work with everybody that wants to work with us. I think, our discovery call process is a two-way discovery. So we got to figure out, well, we got to demonstrate that we would make sense for the person.
Mhm.
We also need to make sure that they make sense for us. And so we've just set up our processes so that, I can get a feeling of, do they take advice, and are they willing to think about things in a new way? Here's a good example. And a lesson I learned about this. Somebody called me, let's say, I think it was 2022, and they said, hey, can we work together? I was like, yeah, sure, here's a proposal, whatever. They said, well, let's wait. A year later, they called me back and they said, hey, we have 4 weeks of cash left. Can you help us? And I said, yeah, we can help because we've done it before. And so we joined them and we went through their expenses and we said, oh, your brother actually is actually not a meaningful contributor to your business. You should let him go. And your mom is also not a meaningful contributor to your business, so you should let her go. And you're in this club that you're not getting any leads from, so you should quit the club and stop paying them yearly dues. And we went through it. We said hack all this stuff out. And they said, actually, I don't want to cut any of those expenses. And we said, but you don't have hardly any cash left. And they said, yeah, well, we'll just sell more. And I was like, it's not that easy. And like, so we ended up not being a good fit with that person. Um, Another example is, someone called me, they were in the UK and they said, we were on Amazon, we want to expand to Shopify. And I said, you know, uh, it- turning on a new channel has a significant amount of risk. Um, and so I said to them, don't do that. It's a bad idea. And they said, why? And I was like, well, because have you done it before? No. Have you had a site built already? No, they don't. Do you know how to advertise on Facebook? No, they don't. And so like I said, just do better on Amazon. And I was the only person they interviewed that told them that. Of all the other CFOs, I was the only one that said, don't do that. Just do better at what you're currently doing. And I create some friction points in our discovery process to see, like, are we going to be a good fit, I guess.
Yeah, because business owners, when they do well in one area, they
Mhm.
want to jump to something else that they have no history.
Exactly.
And like you just said, it's a risk because you don't know whether it's going to catch. Well, then it's going to take time
Hmm.
because you're competing with other people in the same space and it's going to take time. And persistence, consistency, a lot of marketing, which all costs money.
Hmm. Definitely. Absolutely.
And if you don't really have any money, then you need to get to a place where you have enough money for risk.
Absolutely. Yep.
Yeah,
100%.
yes, indeed. Wow. Wow. This CFO thing, I think is the best thing that ever happened to businesses because, like you said, that 300,000 versus half, that's a significant savings
Huge.
for sure. Now, you say you work with other uh, CFOs as well.
Hmm.
So I guess everybody has their expertise in the realm of things.
Hmm.
So is that how you function in your company?
Yeah, I think we're fairly e-commerce CPG focused, so a lot of our folks have expertise there. But we don't hire the typical accountants actually. So none of only one of my people was a Big Four accountant. Otherwise they went through industry. So one of the guys was an industrial engineer first before a finance person. Another guy went on through the finance side and with e-commerce managed a private equity group in e-commerce. I've done a number of things. Another guy he was Big Four and then ended up in like a specialist in real estate. Um, and so we try to hire multidisciplinary people, not just like Big Four accountants.
Hmm. Yeah. So when businesses select a CFO, what are some of the criteria that you recommend?
So what's happening now is because people have realized that being a fractional CFO is an opportunity. You're
Hmm.
getting different types of, call it, fractional CFOs. So you get the person that's been a CFO. Like I was appointed by a board of way very very cool, very talented people, and I was appointed and given the role, and I was registered with the Ontario Securities Commission and all kinds of stuff, right? So you get people that were CFOs like officially. You get people that were like VPs and directors. And so I would say that's one bucket is like, or if they're a VP director or CFO of a mid to bigger size company, you're what I would call like, this might be friction in the market, but like you're a true CFO. Like you've sat in the seat, you've owned a lot of responsibility. You're responsible for cash flow. You have to stand up in front of your peers and say, oh, I fucked up or I didn't, right? And so that's one set of people. Then there are folks that were like controllers in an industry role and still helpful, but you just have to be careful which things you need. So a CFO has owned everything and has to sit in front of investors and boards and so on and do forward looking. A controller may not have had that same level, may not have communicated with banks, will be very good at accounting and historical reporting, but if you need the forecasting, you want to use just a controller, just and say just. So then you have people that there's been financial analysts. So their last job in industry was as a financial analyst, and now they're calling themselves fractional CFO. So again, can be useful for the right company and the right need. So if you have a company where you as an owner know what you want and know how to forecast, you just need someone to do the things for you, like do the modeling, then you can use that person effectively. But if you don't know finance, if you don't know accounting, if you don't know how to forecast, if you need someone to get in front of banks and you hire someone who was a financial analyst, you may be setting yourself up for disappointment, right? And then there's a second group of people where they were public practice accountants or are public practice accountants, and they're adding CFO services because it's a nice MRR retainer to add. And again, those people can be highly effective in the right situation. So it's on the client to really understand what they need. And if they need very high level strategic thought, then that's who you hire. If you just need reporting, you can hire a controller. If you just need someone to bang on a spreadsheet, you can hire an analyst. But like you have to be careful about what you need and ask them what is the latest role they had in the industry. Because if you don't ask that question, you might get someone who was just a public practice accountant or an analyst or what have you. Because anybody can call themselves a fractional CFO at this point, right?
Mhm. Yes, yes, and that makes sense. Do your due diligence.
Do your diligence.
Yes, yes. So again, Matt, how do companies connect with you?
Yeah, great place is my website. So eightx.co. I'm also on LinkedIn as Matt Putra. You can find me on LinkedIn. Both of those two places will get a fairly quick response.
Okay, okay. Wow. So this is every time I talk to CFOs, I learn more and more and more about how it works and you know some of the things as a business owner you need to be
Mhm.
about in
Absolutely.
order to be able to work with a CFO.
Hmm. Definitely.
So it's very important to understand the roles that a CFO does and understand your part in it because it's a partnership. You know, you do your job based on what the company gives you.
Hmm. Hmm.
So have you had any clients that you were like, no, can't do it because you
Um,
getting the information you need to do your part. Let's put it that way.
yeah, well, I think if someone doesn't have a bookkeeper and they're not interested in one, then we can't actually do it at all because we're flying blind, right? Like you have to have bookkeeping done. Um, where we struggle is where, again, where we look at something and we go, hey, like here's some ways to think about these options, and they don't like any of them. Like if that's continual feedback we get, then it means we're not a good fit. Um, I'd say it doesn't happen a lot because in discovery, like, you know, we do tend to ask these questions, but
Mhm.
there's unsuccessful engagements with everybody, right? And I would say oftentimes it's just because they aren't a fan of maybe how upfront we are about things. Because look, you're giving me a decent amount of money,
Right.
and it is my duty to tell you if I think there's a problem. And not everybody wants to hear it the way that I have to say it, and that's okay, you know? I tell people when they sign with us, I was like, look, if you're never mad at me, I'm doing something wrong. Because I'm your part, like, I operate I ride shotgun with you in doing this business thing. And if we never disagree, and if you're never irritated, I've not done my job.
Yes. And that's being forthcoming. And you want to work with somebody that's going to be forthcoming because not only is you're doing the service for this company, it's also your reputation on the line as well. You know,
Absolutely.
so it's a two-way street. So every
Yeah.
client that comes to the door, you will always have your best foot forward for them as if it were your own business.
100%. Exactly. Well, that's how we have to treat it. And so because we care a lot, we we I wouldn't say we fight a lot, but like we have hard conversations regularly.
Yes,
Like so here's a good example actually. So last year we worked with a group who were in and around break even and having cash flow problems, and um they ended up we ended up parting ways because we kept telling them, don't do this new thing, don't buy the new software, cut your costs, reduce the people, don't hire the expensive operations person, don't buy the expensive software, don't. And we kept saying don't, and they got sick of it. And for us though, they didn't have elastic demand that they could just capture new demand. And
Mhm.
so when that happens, you have to fix your operations as if your revenue is going to stay the way that it is. And they didn't like that viewpoint, and that's okay. But we didn't end up working well together, and it is what it is.
Did they understand?
I think they understood our point of view, and I don't know that they liked it. I don't know. I mean, they didn't see it the same way. And
Okay.
that's tough. Like I get that. I mean, look, there's so many, all roads lead to Rome in some cases, right?
Yeah.
And I just, again, my logic is that if you can't just increase your demand all of a sudden, which they could not, and you can't just buy an inventory if your demand shoots to the roof, they couldn't do that either. Then I go, what is your baseline level of revenue that you're showing us today? make your operations profitable at that baseline. So whatever the number was, I think it was 6 million a year or whatever they were on. And I was like, you need to plan to make 15% EBITDA at 6 million. Don't try to wait till you're 10 to make 15%. Make it now. And if you spend on the growth, but just reduce operations. Like, so for example, they wanted to change warehouses to do their own fulfillment. Like, why? No, don't do that. It's not going to help you grow. You're going to save barely anything. And in fact, the move was more expensive. The racking was more expensive. It took
Mhm.
longer to get up and running. The lease was twice as much. They needed new software that was twice as much. So there was all these second order costs to that decision.
Mhm.
And I saw that coming because we'd been around the block. And they just didn't appreciate the viewpoint. And I understand. Like, it's maybe in some cases I could say, uh, yes, do this thing, and here's how I would approach it. But again, for me, I gotta stay true to myself, um, I'm not
Yes,
everybody's
and it
vibe.
makes sense. I mean, because they were putting themselves in more overhead
Yeah,
right out the door, and it doesn't make sense.
not to me.
Not to me either. You know what I
Um,
mean? So if we
but
can get
maybe they found someone that was a little more of a cowboy about it, and maybe they found some capital. Like, who knows, right? But I'm of a different. I see things just a bit. I look. I'm not my way isn't the only way.
right,
It's just a good way that will work and is slightly more conservative. And if that doesn't vibe with you, hey, no problem, right?
yeah, because I'm on the conservative side. I'm
Yeah,
not one to jump out into the ocean.
no,
No,
no.
I'm like, no, 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 no.
Swim in the pool first, and if that
Yes.
goes well, jump in the ocean.
Or put
Exactly.
my foot in a bucket first.
Exactly. There. See, good point. Exactly.
All righty, man. So again, how do companies connect?
Website, man. That's the easiest way. LinkedIn, 8x.co, Matt Putra on LinkedIn. DM me, fill in a contact form. I got people that'll reach out to you real quick and we can get in touch.
Wow, this is a very, very interesting conversation. A lot of gems dropped here. And audience, I hope you had pen and paper ready and definitely took some notes. And I am so looking forward to having this conversation again, Matt. It was very
Yeah, that was
um,
awesome.
educational. So thank you so much for taking time out. And thank you, audience, for tuning in.
Thank you. This was so great.